Gold is a currency and a commodity. Central banks worldwide hold the precious metal as an integral part of their foreign currency reserves, validating gold's role in the global financial system. Central banks have been net buyers of gold over the past years. China and Russia, two leading producing countries, have built up their reserves via domestic output. Russia moved away from holding US dollars, favoring the euro currency and the precious metal. After months of digesting the move to the August 2020 high and consolidating around the $1,800 per ounce level, gold broke out of a narrowing wedge pattern to the upside and was sitting near $1,900 per ounce at the end of last week. Technical and fundamental factors suggest that gold could be heading for a test of the August 2020 high at $2,063, the critical technical resistance level. The wedge pattern gives way to the upside. Gold settled into a wedge pattern of lower highs and higher lows since March 2021. The chart shows the narrowing trading range that created the $1,800 per ounce pivot point from March 2021 through mid-February 2022. When gold broke above the mid-November $1,869.70 lower high, the wedge pattern ended with a technical breakout to the upside. At near the $1,900 level at the end of last week, gold had a bullish skip in its step. The situation in Ukraine is bullish for gold. Gold moved higher as Russia amassed 190,000 troops along Ukraine's border. As a Russian incursion became reality, the price rose above the $1,970 level. On Monday, February 21, Russian President Vladimir Putin laid out his case for moving into Ukraine for the Russian people and the world. Russia considers Ukraine Western Russia, while the US and NATO allies believe it is a sovereign country in Eastern Europe. President Putin demanded guarantees that Ukraine would never become part of NATO, which was rebuffed. On February 22, Russian troops rolled over the border into eastern Ukraine. On February 23, the US and Europe unleashed sanctions, promising even more sanctions if Russia moves its troops towards Kiev, the capital. Kiev is the most populous city in Ukraine and the seventh most populous city in Europe. On February 24, Russia invaded all of Ukraine, and the US and NATO tightened the economic noose with more sanctions. The situation in Ukraine created the first significant war in Europe in decades. While NATO troops have no intention of fighting the Russians, relations have deteriorated to the worst state since the Cold War gripped Europe and the Berlin Wall separated the West from the East. Gold tends to rally when uncertainty dominates the geopolitical landscape. Aside from Russia and Ukraine, China's desire to reunify with Taiwan is another potential geopolitical crisis on the horizon. The US dollar has been the world's reserve currency, but deteriorating relations between the US Russian and US Chinese governments make gold a more attractive choice for the governments opposing the United States. Inflation continues to support the precious metal. While the geopolitical landscape supports gold's price, inflation continues to underpin the precious metal. The January U.S. Consumer Price Index rose 7.5%, with core CPI excluding food and energy rising 6%, the highest readings in over 4 decades. The Producer Price Index increased by 9.7%. Inflationary pressures continue to grow. While the U.S. Central Bank will raise the Fed funds rate in March, it will only scratch the surface of addressing the inflationary trend pushing the cost of goods and services higher. Real U.S. short-term interest rates will remain in negative territory if inflation does not recede. Meanwhile, with crude oil eclipsing the $100 per barrel, wheat over $9.50 per bushel, and other commodity prices reaching new highs last week before correcting, inflation is not coming down anytime soon. The Fed would need to hike the Fed funds rate by 25 basis points 30 times to push real short-term rates to zero, given a 7.5% CPI reading. Energy and other commodity prices are rising due to the geopolitical landscape, setting the stage for even higher inflation readings in 2022. Inflation erodes money's purchasing power, which is bullish for gold. A crypto correction could be pushing capital into the gold market. Bitcoin and Ethereum prices reached all-time highs on November 10, 2021. On that day, the two leading cryptocurrencies put in bearish key reversal trading patterns on the daily charts and followed through on the downside. At the end of last week, Bitcoin was below $40,000 per token after trading to a high of over $68,900 in mid-November. Ethereum was under $2,800 after reaching over $4,865 per token in November. Cryptocurrencies are candidates for inflation hedges and flight capital and compete with gold for investment capital. However, the bearish price action in the cryptocurrency asset class is likely pushing investors into gold, the metal that has been a store of value, flight capital, and an inflation hedge for thousands of years. A perfect bullish storm for gold as $1,900 is becoming a pivot point. As of the end of last week, the $1,900 level looks like it could replace $1,800 as gold's new pivot point after the technical breakout of the wedge formation. While technical factors continue to point higher, fundamentals are even more bullish given the economic and geopolitical landscapes. Gold corrected and digested its move to a new all-time peak since August 2020. The yellow precious metal now looks ready to challenge that high and move to even higher highs. We could be at the beginning of an almost perfect bullish storm in the gold market as political and economic conditions make the metal that holds value highly attractive in the current environment.